Have you heard that the stock market earns 10% a year? And are you wondering why, if you're invested in the stock market, you don't make 10% a year? That's what I'm going to be addressing in this video. Hi, I'm Camille Gaines, author of Earn, Grow, Give, and I'm a financial coach. In this video, I want to talk a little bit more about the 10% return on your investment account and how it relates to a video I did not long ago where I talked about the income from $1 million invested in stocks and bonds. Now, I want to talk about this because I had a lot of comments and questions. Some people were downright mad about it. And I want to explain because I think there's some confusion maybe about income versus growth. So that's what I want to talk about in this video. The first thing I want to explain, I've talked a little bit more about this in another video, but it's the reason you invest. You invest either for income, and that means your money's going to earn money. It's going to pay you while you have that money invested. Or growth, and that means that your money's just going to grow over time. It's also called capital appreciation, and it's sort of the objective of long-term investing. Over time, your money can grow, and that is what's referred to as the capital appreciation, but that's often what you see when you hear the stock market over long periods of time earns about 10% a year. Now, first of all, let me say that's over decades, okay? So those averages come from a very long time, longer than most people invest, unless you're really young. And the dividends that come from being invested in stocks are reinvested to come up with that return. So over time, the value increases in the stock market, and those dividends are reinvested, and the money, the wealth accumulates in the stock market. And it's an average of those fluctuations up and down that happens with the stock market. It drops down and then it comes back up over where it was before, almost always. Then it drops down and then it comes back up over where it was before. And so that long-term accumulation over many years, several decades, is about 10% a year. Okay, that's not income. Income from your stocks comes from dividends, okay? And dividends are paid when you own a stock. The company pays dividends to the shareholders, and that's almost always out of the company earnings, and that is money that the company made, and it's paying out to its shareholders. Now, when you're in a fund, a stock fund, that money is usually just reinvested. But some people, especially when they have retirement income, they need retirement income, they take those dividends. So they may be invested in individual stocks, and they have dividends that they actually take into their account. They say, no, don't reinvest my dividends, and this could be a fund or individual stocks. Don't reinvest my dividend. That's usually an option when you get a fund. Put that money right into my account, and then people can withdraw that money to live off of and pay their expenses. That is dividend income. That's different from the appreciation that's referred to regarding the stock market over long periods of time, that 10% return, that capital appreciation with dividends thrown in as well. That's different. And so right now, the S&P 500, which is an index, and it covers the broad U.S. market. Stay with me. You may have seen my other video about the index. If you don't know about it, if you're a regular investor, you do already know about the S&P 500 index. So right now, if we look at how much the S&P 500 index has for a dividend yield, how much it's paying, it's about 2%. And so that is the income number that I used on my retirement income from $1 million portfolio video, and that's what I was referring to. I had several almost angry comments from viewers that said, well, wait, no, the stock market yields, or it returns 10% over time. Sure, it does over long periods of time, but that's number one, over very long periods of time, and number two, that's not the dividend. That is the growth in the stock market over time, and dividends thrown in, probably some inflation thrown in as well, now that I think about that. But It's different than income. Dividend income is what's paid to you if it's paid to you, and you can either reinvest it or you can take it out and use it as money to live on. So that's what I was referring to in my video on retirement income from $1 million portfolio, because most people don't realize that the income from $1 million is not as much as they think that it would be. In fact, in that video, it was about $2,500 for $1 million portfolio invested in stocks and bonds. Feel free to watch that video if you'd like to see it. I'll put a link in the description to it. But I wanted to clarify this because it bothered me that there was so much confusion around income from stocks and capital appreciation from stocks. So that's what I wanted to share with you in this video. I've done an ebook that clarifies the reasons you invest, and it talks about the income versus the growth, and that's the R, the reasons you invest. And so I'll put a link to that as well if you'd like to grab it. It's absolutely free. It's a little ebook I did on investing basics. Thanks for watching.